Good afternoon, Will.
Good afternoon, Ziad.
Welcome to Money Talks, our podcast of the Financial Policy Council. Well, making sweeping changes to America's energy mix poses risks beyond just prices going up, as you know. In your view, what are the strategic threats to national security, uh, the dollar standing, and overall economic stability if we rush this transition?
I think our risks of rushing this transition, at first you're going to have massive inflation. Your dollar should go down. The best example of this is Europe in 2022, when they rushed their energy transition and relied on windmills and solar panels and then Russian natural gas for baseload. They got rid of their nuclear plants, and then the war broke out in Ukraine. And then there was a massive natural gas shortage. The euro had dropped below the dollar for the first time in 20 years. And that's what I think we'd be looking at if that happened in the United States.
Well, it's happening.
Yes, but relative to Europe, they were having to rush to import natural gas from all over the world, Qatar, the United States, and then they also had to refire up a bunch of coal-powered plants, which defeated the purpose of a lot of the environmental movement. In most of the United States, we haven't reached the point of energy rationing yet.
Do we have a policy, energy policy? Does President Biden have an energy policy? Or is it all over the place?
It's all over the place. In the short term, it looks like they want to keep prices in check. It's very unpopular on the consumer voters to have gasoline price double. And if they did some of the things they said they did, we're only scratching the surface at
Absolutely.
how bad it can get. I'll get into that a bit later, but I think in the short term, rely on the private acreage that we're drilling and fracking and shale. They don't seem to have a very good long-term plan. There's been 2 years of lease delays. They had one leasing round offshore in the spring, and then it's tied up in the court system again. So at this time in year 3, we'd normally have 6 leasing rounds offshore. We're at 1 right now. And that's not going to hurt him this term. And if he gets reelected, it's probably not going to hurt him the next term. That's hurting the next people in line. That's how the offshore leasing works in the large time scales.
Let me ask you a question, Will, since you're really an expert in this subject matter. What would you do if you were in charge of the energy policy in the United States and you have carte blanche or green light to do whatever you want to do?
First thing I'd do is return the 2 rounds of federal offshore acreage leasing. That gives companies the ability to plan long term. I would stop taking federal acreage off limits and then occasionally put it on, just give consistent guidance to go drill. Open up Alaska. That's been decades where people have been trying to drill and produce there. They have pipelines in place where the capacity is getting low, where you might start having wax problems. Those take long commitments to bring on oil from an environmentally sensitive area in the Arctic. You need the ability to plan long term there.
Very insightful. What about the strategic reserves?
Strategic petroleum reserves. I'll give you the worst example ever in 2020.
Please do.
So the strategic petroleum reserves was approximately 90% full, maybe 85%. But oil demand went from 100 million barrels a day to briefly below 80 million barrels per day. Oil price it was a day or two, but it was negative $37 a barrel. But the majority of that time during the lockdowns is approximately $20 a barrel. And oil companies would have sold the government oil to fill up those reserves at $24 a barrel. But Congress denied that because that is a handout to oil companies. So if you ask anybody on earth, would you buy oil for $24 a barrel? That's an enormous discount. And then they get to sell it back to the taxpayer at a profit later.
At a huge profit.
Yes. And then now what we're doing is oil's been, the past year, it's been kind of bouncing between $75 and $90 a barrel. But we drained over half the strategic petroleum reserves after the Russian-Ukraine breakout, and I think to lower the price might help them in the elections. But now I think we're at about 40% strategic petroleum reserves capacity. So we're trying to refill the strategic petroleum reserves, waiting for the price to go low. And it might dip down below 80 for a brief amount of time. They might buy a little, but they could have filled that up when it was dirt cheap. And you shouldn't have to release your strategic petroleum reserves just for lowering the price. That should be an emergency, like a export terminal being bombed of Saudi Arabia. You should be pushing to get new oil out of the ground, exploring for new oil, having a good policy to not tap into those reserves.
You have a front row seat to the logistical complexities of energy production. What advice can you offer leaders navigating this transition beyond good intentions to avoid destabilizing the economy? What really should governments, the energy industry, and individuals do to manage with high oil and gas prices in the short and long term?
Okay, in the short to medium term, if you have one commodity such as natural gas price that's pretty cheap right now at $3 an MCF, an oil price at between $75 and $90 a barrel, that's when the government should be working with companies, oil companies, businesses, to try to increase the market share of natural gas transports, particularly 18-wheel trucks. Mm-hmm. I'm not a big fan of blanket mandates. Those quite often create more problems than they solve. But increasing competition's the best thing to do in the short term. And in the long run, you're going to have to open up more offshore leasing.
Yes.
You are going to have to plan for grid stability with electric vehicles, because there's already been problems in California where people have not been able to operate their ACs in the summer. Yep. They've been told to keep their temperature and their thermostat above 80 degrees Fahrenheit.
Basic.
So another thing in the short term is for the oil companies that are not getting as much new acreage to drill off of, and the shale oil industry, them producing the Bakken, the Eagle Ford in South Texas, and the Permian. They've been ramped up for 15 years now. So when oil prices are low, what operators will tend to do is do anything they can to get the lowest break-even price there is.
Yeah, indeed.
And then when oil price goes up, you want to see that shift towards squeezing everything you can, because it makes sense to do that in a high oil price.
Yep.
And it's testing some methods that have been used in conventional oil fields that are a bit more complex than the shale fields. I'll get into a bit later.
Yeah. Well, in a volatile global landscape, How does pursuing greater energy independence safeguard America's capacity to deter aggression and project power?
So when we don't have energy independence, that gives control back to all the other major oil producers in the world, a lot of them being geopolitical adversaries. And both from a cost standpoint and a market share standpoint. Just since the start of this summer, we've seen Iran ramp up almost 1 million barrels per day that we would have been able to keep sanctions on them.
Yeah.
But now people don't want to deal with 120 or 30 bucks a barrel, so they'll let it slide.
So Trump was right all along.
Yes.
To the dot.
Yes.
I mean, is this done on purpose, what's happening with the Biden administration? I don't want to go into politics, but or is it really incompetence or misunderstanding of the situation?
It seems like a managed decline where they're doing anything they can not to give us long-term stability in the energy markets.
And long-term stability of the economy. Everything is driven around energy.
Yes.
Everything.
Your price of food, your price of plastics.
So this is pretty much intentional.
It seems to me that way.
It seems to me that way too.
And now going to Venezuela looking for them to ramp up and then blocking the Keystone pipeline. And you are going to have to think outside the United States, which can't do it alone forever. I think we had a nice luxury the previous decade discovering that shale revolution in the early stages of it. But Canada has 160 billion barrels of tar sands reserves, and we blocked the Keystone pipeline after it was already in construction. So we are importing some crude from their tar sands, but they're doing it by rail, which raises the transport cost for that company selling it to the United States, and it's far worse environmentally than a pipeline.
This is amazing. So how long will it take to reverse this trend if we have the right president in power who seeks energy independence? Honestly, are we talking about years, decades?
In terms of energy pricing, I don't know if it's the right thing to say reverse, or to get us back to the 2015 through 2020.
I mean, reverse, that's what I mean.
But not for it to get much worse, because...
That's exactly what I meant.
Because when in 2029, when some of these leases that weren't offered offshore, when they're not coming online, that's when a lot of the already sanctioned projects will have already been ramped up, and everything offshore will then be in decline. So then you'll have a double whammy with shale in decline and offshore in decline.
Well, the shale oil and gas revolution brought the industry from an era of scarcity to an era of abundance. What are the next potential game changers in the industry when the United States shale oil and gas can no longer be relied on for growth?
I think that's where we're getting real close to that era right now. Shale.
So how close?
2 years.
Mm-hmm.
But I want to get into this game changer now, because with everything we've seen the past decade and a half, I've seen a few things that can move the needle, such as water injection or gas injection to help maintain pressure and sweep from an injection to a producing well. Mm-hmm. But the complexity of the shale fractures that are man-made versus a conventional reservoir. A conventional reservoir, think of it as a big rock, mm-hmm. and you have one well here, you have an injector here, a producer here. your rock has, like a sponge, those interconnected pores where you simply inject the water and it helps sweep more oil to the producer, and it can increase recovery factor by 10 to 30%.
Wow.
That's much more difficult in shale developments, because think of it this way. You have a horizontal lateral here, a horizontal lateral here. You have maybe 15 fractures here down the line of the horizontal. And then from this well, you might have your 15 fractures here, and they might interconnect. But you're relying on those being connected to each other to be able to displace more oil to the producer. So naturally, that's more complex, and we're looking at 2 to 4% increased recovery.
I see.
But from a shale reservoir, without that, you're looking at 6 to 8% of all the oil in the reservoir being produced. If it weren't for the fractures, you'd get 0%. But that would get us to about 10%. But one thing, I just listened to a podcast last weekend of this company called Shale Ingenuity, where they have this surfactant that you inject for a couple of days at high pressure that is supposed to increase the fracture complexity, opening up more surface area of the rock. And they tested it in a lab, and that was of a core plug, maybe about this big. But we're not fortunate to be able to develop to access everything 1 or 2 miles deep like we are in a lab.
Yeah.
But after the test, they were able to recover 90% of the oil with the surfactant, running some tests. Now, in a reservoir that you can't see, that's 1 to 2 mile deep with horizontal laterals with fractures you can't see, the initial results indicate that they're getting you can get 18 to 30% recovery from an oil reservoir. That is something where it could really move the needle, extending the shale revolution a couple decades. So that's something I'd like to see the industry get involved in, that a little bit beyond the scope of a president, unless, of course, he decides to ban it,
So talking about that, banning it and the president, I don't want to go into politics,
Yeah.
but that's a very important question. The oil lobby is definitely one of the most powerful lobbies in the United States, if not the most powerful lobby in the US. I mean, when they see what's happening, why can't they do anything about it? Why are they so weak in responding or in lobbying the administration or the Secretary of Energy in doing something about it? Because at the rate we're going and the way you're describing it, we're heading to a disaster.
Yes.
I'm being very candid here.
I think a lot of it's political pressure. Yeah, I think they want to keep drilling offshore longer, but the amount of power of, the Black Rocks of the world.
It's good you mentioned this.
I'll bring up an example.
Yeah, please do.
Against Exxon's CEO's recommendation, BlackRock had 2 activists put on ExxonMobil's board of directors because BlackRock has so much power in shareholder votes.
Okay, you answered my question. Right on. All right. You've been involved in the FPC for some time now. We welcome your contribution and everything. The FPC seeks to positively shape policy conversation by elevating experts like yourself in every single sector. Why is this advocacy role so crucial, in your opinion, when navigating complex issues like energy transition?
The size of the world's energy system is enormous. Right now we're consuming 103 million barrels of oil per day. 2023 year average 100 2 million barrels.
We are the largest
Yes.
consumer of oil in the world.
Yes.
Yes.
And future projections range all the way from 106 million barrels from the IEA in an accelerated energy transition, and 116 million barrels of oil per day, which is OPEC's projection. Those are drastically different.
Yeah.
And I don't think it affects your short-term shale planning much, because you can pick up a newspaper, take a look at the price of oil, send rigs out there. But for long-term projects such as new offshore platforms, wells, pipelines, refinery expansion, you have to have confidence that you're not sinking in billions of dollars when everybody's saying you're no longer going to be needed in a few years. It's very difficult, I imagine, to justify that to your board of directors.
Absolutely.
And this is why it's so dangerous. Some of the things I've heard saying, I've heard a lot of people talk about, we're going to ban fracking. Well, that hasn't happened. That was, kind of tough talk. But if that did happen, shale oil has a very steep decline rate, especially in your first few years. But if the United States for 1 month were to add no new oil to the market by banning drilling or hydraulic fracturing, we'd lose 620,000 barrels of oil production per day. Now that decline will flatten off later because you have a hyperbolic decline curve. But, OPEC says 100 million barrels a day, we'd lose 6 million in a year. I think that's underestimated, because right now, shale accounts for 9.6 million barrels per day. In your first month, you lose 620,000, 400,000 from the Permian. So over a year, you'd be looking at losing 3 to 4 million barrels from shale alone. And then conventionals would probably decline another 6 million barrels. So you might be looking at 10 million barrels decline in a year if that happens.
So this would drive prices to what approximately, you think?
Oh, I don't think we've seen anything like this before, but upwards of
150.
200.
Yeah, I would say
200 bucks a
150 to
barrel.
100.
Yes, that would be something I'd pray never happens.
Can you imagine the impact on the economy? On
Yeah.
everything.
And then up north, you'd have people freezing with the decline of shale gas. Now, if shale was never brought to the market and you relied on more conventionals and maybe even tar sands of Canada, the world wouldn't be relying on hydraulic fracturing like it is now. Now, don't get me wrong, it'd still be very dangerous to say, no new drilling or anything. But the fact is that we're this reliant on hydraulic fracturing to where we'd lose 620,000 barrels of oil per day in the first month. This puts us in a situation that I don't think people plan for and think seriously when they talk about banning fracking. It's been done state by state, like New York has banned hydraulic fracturing and shale gas.
Yes.
So right now we're a little bit insulated because Pennsylvania still has plenty of reserves for us, but maybe a few decades down the road, you might want to be tapping into that.
So the problems are real. The solutions are few. I'm looking forward to reading your white paper along with Tim and other members of the energy group in the Financial Policy Council. And I thank you so much for your time, Will. We'll be keeping in touch. Great to have you on board. Thank you.
All right. Thank you, Ziad.
Thank you, Tim.